All right, let's dive into the latest results from an absolute titan of industry, Mitsubishi Heavy Industries. They just dropped their numbers and the market went wild. So we're going to break down exactly what got investors so excited.
And when I say wild, I mean it. Look at that. The day after they reported, the stock shot up almost 5% on the Tokyo Exchange. We're talking trading volume more than double the average. This wasn't some quiet nod of approval. This was the market screaming, "We love what we see."
So, what was in that report that lit such a fire? That's what we're here to figure out. Over the next few minutes, we'll slice and dice the numbers, get into the strategy, and really understand why everyone is so bullish on MHI right now. Okay, let's get right to the good stuff, the headline figures. And listen, this wasn't just a good quarter for Mitsubishi Heavy, it was a record smasher. We're talking the best first quarter performance they have ever had. And here you can see it was just a clean, solid beat against what the analysts were expecting. They beat on revenue, the top line, and they beat on earnings per share, the bottom line. It's just a really clear signal that the company is firing on all cylinders, running way hotter than anyone predicted. And this chart really tells the story. You see revenue, profit, and net income all hitting new records for a Q1. But just look at that middle bar. Business profit is up almost 25% year over year. That is a massive leap, showing just how profitable their operations have become. The net income number looks a little smaller, sure, but that's only because last year they had a big one-time gain from currency exchange. The core business, it's absolutely humming. So a record quarter is fantastic, right? But for any serious investor, the real question is always, why? What's actually fueling this incredible growth? Well, it turns out MHI is riding two really powerful long-term waves right now. And these are the two big engines pushing the company forward. First, you got Japan's major defense buildup, and MHI is right at the center of that. And second, and this one might be even bigger, you have this huge global demand for power. Think about it. All the new AI data centers, all the factories coming back onshore, they all need a ton of electricity, and MHI builds the tech that generates it. And hey, don't just take my word for it. This is straight from the CFO. GTCC, that stands for Gas Turbine Combined Cycle, which is just a super efficient way to make electricity. They're seeing huge orders in North America, and it's tied directly to that insatiable hunger from data centers. They are quite literally building the power plants that will run the AI revolution. All of that demand leads to this absolutely staggering number, 10.8 trillion yen. That is MHI's total order backlog. To put that in perspective, that's over $70 billion US. This isn't just a hopeful forecast. It's a mountain of signed and sealed future work that gives them unbelievable stability for years to come. Now, having a backlog that big is like a huge security blanket. But, of course, no business has it completely easy. It wasn't all sunshine and roses. MHI had to deal with a couple of pretty big challenges this quarter. And frankly, how they handled them is a huge part of this story. Okay, so check this out, because this is what makes their profit growth so impressive. Last year, a weak yen gave them a 20 billion yen boost, a huge tailwind. This year, the yen got stronger, which created a 6 billion yen headwind. The fact that they still grew profits by almost 25% despite that currency swing is just incredible. They basically jumped over a multi-billion yen hurdle and still broke the record. The other big worry for investors was US tariffs. But management had a really clear, really effective playbook. For big-ticket items like airplane parts, the customer, in this case Boeing, is the one who pays the tariff. For other stuff they bring into the US, they're just passing those costs along. The bottom line? The CFO said the impact on their profits was immaterial. They basically just neutralized the entire threat. So, we've looked at the record results, we've seen the powerful forces driving them forward, and we've seen how they've skillfully dodged some major headwinds. Now, it's time to look ahead and give you our final verdict on the stock. So, the big question is, where does the stock go from here? Well, first things first, management came out and confidently stood by their full-year guidance. They didn't feel the need to raise it after just one quarter, which tells you this amazing performance was actually part of their plan all along. That shows a ton of stability and confidence in their game plan for the rest of the year. And that confidence, combined with everything else we've seen, leads us straight to our call. Our rating on Mitsubishi Heavy Industries is outperform.
And the reasoning is just rock solid. You've got the company firing perfectly on those two big engines, defense and energy. They're making more money on every sale, even with currency working against them. That huge backlog takes a ton of risk off the table. And maybe most importantly, they're generating positive cash flow, which is just a key sign of a well-run, disciplined company.
Okay, before we wrap this up, let's talk about a more speculative idea, something you might hear pitched at a hedge fund. We're calling it the global grid play. So here's the thought. You could look at some long-term call options on MHI's American-listed shares. The whole idea is that the market still hasn't fully grasped just how massive the demand for power is going to be because of AI. The catalyst could be that MHI just keeps winning more and more of these power plant deals, forcing them to raise their guidance later this year. At its core, the bet is simple. MHI isn't just another industrial company. It's a critical enabler of the entire AI economy.
And that's our take. Mitsubishi Heavy just looks like it's in the perfect spot to ride some of the biggest economic waves for years to come. And as always, please remember, this is all for informational purposes. It is not financial advice.